Morning, ladies and gentlemen. Welcome to the Exploration and Production panel. Oil and gas being finite resources, exhaustible resources, of course, make us be conservative in general, as it was pointed out by Peter Boser this morning. So we normally cover ourselves by looking at the future and also taking the precaution of having always a low case scenario just in case. However, if we look at history, I guess in a more general view, we can always count on the industry coming up with the answers, and that is based, of course, on technological evolution and human ingenuity. And I think that has been at the core of everything that we have seen along the years, ever since the industry is there, and we have been looking at the future thinking, how long will it last? So I am an optimist in that side of the business, so I think we are standing in for a good future in oil and gas. Only a few years ago, we were talking about peak oil, and now we're talking about a revolution in progress. And behind that, of course, is human ingenuity and technology. Hubbard, in 1950s or so, he said there was going to be a peak in the U.S. in the 1970s, and he hit the mark. He later on in the 70s said there was going to be a global peak in the 90s, and he missed the mark. And some of his disciples and followers predicted a peak in 2012, which did not happen. When you look at the work by Richard Nehring in the history match of the San Joaquin Valley and the Permian Basin, we can see how the Hubbard model fell grossly short in predicting the volumes of oil from those two basins. What happened to Hubbard? Well, I guess he failed to foresee the impact of technology and human ingenuity once again. And now that we're seeing this revolution in oil and gas from shales, of course, we think completely different. And I do agree with Abdallah Al-Badri when he said that this is going to add to the oil industry as we can see it. But one immediate impact, of course, is going to be we're going to see significant changes in the supply lines all around the world. We're already seeing the United States getting prepared for exporting gas, and they cannot export oil, but they are certainly growing, and they're at the top in growth in oil production in the last few years or so. Well, perhaps when we think about this, we have to be careful. We do see gas growing, but oil, first of all, generation, migration, and accumulation of oil in shales is different to gas. It's more complex, and it's not that frequent. We don't see it so much around as we can see shale gas. We can dwell into that. We can get into more details, but that is the case. The other thing, of course, of precaution is the decline rates in oil. And we see very steep decline rates that we have to think about. It was mentioned here this morning also. There was also a reference to something which is very important. When we look at the resources around the world in shale oil or shale gas, we have to be careful because, and it was mentioned by Andrew Gold this morning, the United States is a different case. He did mention the land rights, which have been crucial to the success in the United States. But it's not only the land rights. We also have, in addition to that, the strong service sector, strong and healthy. There's no comparison in the service sector around the world, no comparison to what we have and we can see in the United States. Strong capital markets, which make for availability of cash and generally cheaper than the money that we can get in any other part of the world. And then we have the futures markets, which have high liquidity, and that allows for hedging operations. So the United States is not easily replicable in other parts of the world. We're looking at, of course, the global resources as determined by several studies, including one by the Department of Energy, and we're thinking, with good reason, by the way, that now we have a world that has gone from 50 years of oil and 100 years of gas, perhaps to 100 years of oil and maybe 200 years of gas. Will this materialize, and what will be the time frame? Those are really important questions. And the last consideration is the environmental consideration. There is a lot of speculation about the damage of fracking. And I guess we must remind ourselves that fracking was introduced in the oil industry back in 1937. And ever since fracking was introduced in the United States, more than 1 million wells have been fracked. And in the US, the drilling of wells goes at a rate of about 45,000 a year. 80%, 85% of those are fracked. So there's not an issue in fracking. If you have a damaged cement job, deficient cement job, you're going to have pollution of the waters. But if you do your well job well done, it's going to be protected. Disposing of the waters is an issue. And last but not least, the methane emissions, which are higher in the case of shale gas, and that is becoming more and more of an issue that we have to deal with. Conclusion, I think we have a lot of challenges, but once again, technological evolution and human ingenuity, I think they're going to bring the answers. Against this background, I will leave the floor now to Ayman Asfari. He is the head of Petrofac, and it's, I think, fortunate that we have him here because he heads a very large service company where a lot of the technology and the challenges are faced directly in the fields. So I will give the floor now to Ayman Asfari, and later on we're going to have a dialogue. Thank you very much.
Thank you. I didn't expect to be the only panelist today, but I've got a few notes, and I'll go through them. Petrofac, we're basically a service company. We're the largest UK-listed oil and gas services group. Big presence in the UK. We're in the Middle East, Africa, CIS, Asia Pacific. 20,000 people around the world. We started as an engineering business 30 years ago, and we've built our competencies since. We've got a very big ops and management business. We have a subsurface group, drilling management, asset management, and a training business. We're not very typical of other service companies because one of our large divisions is integrated energy services that offers a resource holders a service delivery model on an integrated basis with capital. So we have been developing fields for the likes of Petronas completely with the capital, and we put all our services together, and we've been working on incentivized service contracts for mature assets for clients like Pemex in Mexico. I'm not really qualified to talk about exploration, so excuse me for that, because really our business is not about finding the resource. We don't take on licenses. We work with resource holders on developing their fields and on redeveloping and their mature assets. But we have had lots of discussions with many explorationists who have fantastic capability to find oil, and we've had lots of successes lately with the likes of Cov Energy and others. We see a number of them now coming out, Ophir and Tullow and many other companies. And a lot of these companies have had this, but they always look for potential partners on the development side. We've had one particular deal with Bolivian where we will be providing them with capital, but in return we will be de-risking the execution for them in the development phase, and we're working right now on the FID. So we see the explorationists in some ways as companies where we offer complementary skills, and we can work with them as partners. Really, our focus in our business is very much on the development side and on the mature assets. And let me address first the development part of the business. There is a massive latent potential of 1.4 trillion barrels of global reserves in conventional oil and gas fields to be developed. Over 600 billion global annual investment to be spent. And for me, there are three simple facts that underline the development challenge going forward. The rising number of producing fields, the number of oil fields has risen in 10 years only from 3,100 oil fields to 5,700. The average size of the discoveries is falling with time. In the 1960s, it was 300 million barrels. In the 1990s, 120, and in the 2000s, about 50 million barrels. And the technical complexity of these developments is rising. This means that there is an increasing call on experience and capability for the clients, whether it's the IOCs or the NOCs, the resource holders. Naturally, our clients, they put their best people to work on the largest fields, which means fewer resources are available for marginal fields. And we have, 2 years ago, we've mapped the potential market for where we can help on development opportunities. And we looked at 4,500 fields around the world that have reserves of about 2.2 trillion barrels. 3,000 of these fields have 10% of the resource, but it's still very significant. It's about 220, 250 billion barrels. And a lot of these fields are frankly underinvested, and there's not much capability going in to attend to them. So there is a great opportunity for us to offer our service and capability with innovative and a fast-tracked approach. And one example what we've had, and we've had a number of examples of developing fields for national oil companies mainly, but we have developed a field for Petronas, which came on stream last year. It's about half a T of gas and maybe 40, 50 million barrels of liquids. We developed it from word go concept to first gas in 21 months. And this was a risk services contract. We, along with our Malaysian partners, Sapura Kencana, we deployed $1 billion of capital. The field produces 100 million scuffs, 6,000, 7,000 barrels of liquids, and we're looking at future phases of development of this field. Now, as far as Petronas is concerned, obviously they have a lower cost of capital than our cost of capital or the rate of return that we would demand. But bringing this gas early and the MPV from the gas, particularly with the shortage of gas that they have, is extremely valuable. So this is a very differentiated offering, and we see many other opportunities like this in the Malaysian waters and with many other resource holders around the world. The other thing I want to talk about is the mature fields. Again, the same capability challenge applies to mature producing fields. Out of the 80-odd million barrels of oil produced today, 50 million barrels are being produced from fields that are more than 10 years old. The growing list of older and older fields is becoming harder to manage. I think all of us know about the challenges that we're having here in the North Sea with the integrity and the maintenance of some of the older facilities that are operating way beyond their design life. But the price for that is we're seeing in the UK the production efficiency dropping from 80% in 2005 to around 60% today, which means if we increase the production efficiency back to 80%, we could be producing another 300,000-400,000 barrels. The global average recovery factor for oil fields is less than 35%, and every percentage point increase in recovery could add 2 years to the total hydrocarbon supply. So really the solution is very much focused about focus, discipline, and obviously deploying a new technology. We have developed an asset management business in Petrofac. We are working on mature fields. I guess the biggest example for this, even though we have a number of operations around the world, is our entry into Mexico a few years ago. We are operating 4 mature fields for Pemex, Santuario, Magnales, and Panuco in a joint venture with Schlumberger, as well as Arenque. And on the first 2 fields that we've had in a 1 year in Santuario an increase in production by 95%, and in Magnales in the same year an increase in production of 30%. And we see tremendous opportunities for continuing to increase productions in these fields. And it's really not rocket science. It's basically managing these fields in a good oil field practice and bringing some investment to these fields because they've been underinvested for many, many years. I want to address 2 other points, which I know our clients in the IOCs talk about, which is really the cost challenge, and I think the challenge around the competency. Let me start with the competency. I think this is a real issue. I mean, the work and the challenge that we are facing, I'm not talking only about the service industry, I'm talking about the oil industry at large, is only going to be met through enhanced competency of people. It's basically both the numbers of people coming in, and we need more people to come in, as well as increasing their competency levels. I mean, our greatest business in terms of value add to our clients is our training business. We trained 54,000 delegates last year, and we have training programs around the world with a number of clients, particularly with NOCs. We have recently announced an agreement with Petronas where we're building a major training center. It's going to be commissioned early next year. And we're managing their competency program. We're looking at training a number of their staff. I think we're starting with 600 next year, which is really for us, I mean, in terms of value, we've announced it's $120 million. It's not as significant as the value add we bring into clients. But I think this whole area of competency is going to be huge. And the drive to work on it with the NOCs in particular is going to be quite essential. The other point I want to talk about is the cost challenge. And I know we hear a lot from our clients, from IOCs and NOCs, that prices are expensive. You need to drive the prices down. And Herman yesterday mentioned that it's around finding the expensive oil has been the cheap oil has been produced. It's now the expensive oil. And I agree with all that. But I really think that our industry can do a lot better with efficiency and with better performance. And I'm not only talking about, I think the service industry can do better, but equally, our clients can do better. If you look at the performance of the industry over the last 2 decades, I mean, we've looked at statistics going back to all kinds of projects. More than 60 or 70% of the projects are above budget, and they have been executed well behind schedule. Now, in a world that we've had, which is a world of rising oil prices, most of these projects were approved on economics with oil price at $20, $30, $40, $50. What saved the industry today is the fact that we're selling oil at 110 Brent. I can bet you that if you were to run these projects based on the economics when the FID was approved many years ago, many of them would be underwater. If we're looking today at a flat oil price environment, really there is no tolerance at all for not upping the game as far as performing better. And I think we have a challenge, all of us in the business, to drive operational excellence and to do a lot better than what we have done before. The same point about availability. I mean, 60% availability for our North Sea assets is totally unacceptable. We wouldn't accept that availability in the power industry. We wouldn't accept it in the airline industry. And we really need to be able to drive it better. It comes back to the question of competency. Obviously, this is a big area in the drive for competency. But for us, it's also more than competency. For us, frankly, we see this as the biggest value arbitrage play for Petrofac. If we can drive operational performance and operational excellence, for us, it's about focus. So we are an upstream player. For us, it's about also focus geographically because we can drive local delivery, which is an increasing requirement from our client, and about de-risking execution for our clients. But there is a tremendous value play for service companies like ourselves that can drive efficiency and drive performance. I'm not saying that we're the best, but I can see the potential, and I can see the fantastic opportunity and the increasing demand from resource holders to perform to a much, much higher standard. I think this is a challenge, as I said, not only for me, but for all of us combined, all of us in the industry. These are my comments. I'm happy to take any questions. Thank you very much. Thank you.
Thank you, Ayman.
Thank you.
I'm supposed to say a few words about Colombia. I will be very brief on this. The story of success in Colombia continues. There are almost 500 areas that have been awarded and are in exploration or development, about 100 active rigs. By the way, they're coming up in 2014 with a round in which they're going to be offering also unconventionals. The study of the DOE came up with around 20 TCF of potential resources of gas. So that's going to be a target. And they're going to go also and offer areas offshore maybe some of the big players are going to be interested in looking at the continental shelf there. So it continues to be that way. We're going to go to questions quickly. I'm going to ask a question to Ayman. Ayman, and it has to do with Mexico. He just mentioned that they have been working in Mexico. And Mexico, of course, is currently facing a challenge. There are several Latin American countries that are interesting to look at. Miguel Galucho this morning spoke about Argentina and the big resources, and of course there are certainly many challenges there, but the potential of growth is big in Argentina. Then of course it's the case of Venezuela, which is a very difficult one. Mexico is now in some kind of a junction here with probably the best chance, the best opportunity of at least raise some hope concerning an opening there. And I would like to ask Ayman, being an insider there, how does he see the challenge in Mexico?
Well, I mean, I think for me, the decision on the reform is very much a Mexican decision, and you know, there's the debate going on in Parliament, and hopefully they will come to a resolution that's acceptable to everyone there. As far as we're concerned, we see it as a country with a tremendous resource base that has a need for increased level of capability to tap its potential. So in the 4 fields that we're managing, we see tremendous opportunities for production enhancement. You know, obviously there is big shale gas opportunities in Mexico. And increasingly, there will be, in the future, lots of deep water opportunities. So the country has, you know, really lots of potential to do more. I wish them luck with the reform bill when it comes out. But irrespective of that, we have gone into the country before that reform bill, and we have been operating, and we think that we will continue to operate there for some time.
Right. Perhaps I can add a comment here. We have never seen before what is happening now, which is this big political pact called Pacto de Mexico, which in a way is a very strong platform. It doesn't mean it's going to be easy, but I think there is hope, at least, that something can be done. I'd like to use the last 6 minutes or so to see if there's any question from the floor or any opinion from the floor about the subjects that have been dealt with this morning. Everything seems to be pretty clear. So I think we will bring the session to an end, and thank Ayman Asfari for his contribution.